Meantime, back in the U.S., SEC Chair Mary Shapiro and CFTC Chair Gary Gensler are briefing Congress on the causes of the May 6th flash crash. And this week, regulators came out with a plan to prevent similar huge market moves. But will the so-called circuit breakers, stock-specific, work? We're going to speak now to the head of the third largest stock exchange in the nation. That's William O'Brien, CEO of Direct Edge. He joins me here in studio. Before we get to what happened on May 6th, give me an indication of what things are like this morning, because even then we had issues about Europe. We had a lot of fluctuations in the currency market. Can we avoid today what we experienced May 6th?
I think we should. It is a relatively intense day, and obviously investors across the world are challenging their own assumptions and appetite for risk. So you're going to see the asset rotation that's reflected in today's sharp sell-off. But so far, at least, our trading, while higher than normal, is relatively orderly. All
right. May 6th, the solution coming out of that flash crash was to institute circuit breakers that are going to be stock-specific. Are we safer now because of that than we were May 6th?
Not yet, because they're not enforced yet. They will be in a few weeks, but I think shortly we will be. It obviously is a very targeted and fairly quick approach by government standards to really focus on the most egregious parts of what happened on May 6th.
And yet such a high percentage of volume and focus was on ETFs and other assets other than straight equities here. So without circuit breakers that address things like, say, S&P E-minis, how do you actually avoid another flash crash?
Well, I think ETFs and other derivative asset class coordination are going to closely follow. And remember, this is something that's been instituted in less than 2 weeks.
So we will see speed bumps specific to ETFs?
I think that's likely to follow in the relatively near future, yes.
Okay. So when you came out of those conversations and testimony on Capitol Hill, what did you walk away learning? I mean, what do you think actually happened?
Well, I think we spent a lot of time with our own internal evaluation as well as coordinating with regulators and giving them a large amount of data. I think you're never going to find that single silver bullet that, person A caused the flash crash.
But don't we need to know that to really avoid another replay?
I think we need to understand how interdependent our markets are and how quickly they can spiral out of control without some basic, fairness framework in place. And the circuit breakers on a stock-by-stock basis to prevent very, very rapid and possibly unnatural downdrafts in a short period of time are a pretty good place to start.
There's been a lot of conversation about just the changes in how equities are traded right now, what the marketplace even looks like, and the high volume of electronic trading. Given that we did see some high-frequency traders and other electronic exchanges pull back a bit in the instance on May 6th, can you rule out that that did not help accelerate the cascade effect?
I think so far, and in the SEC's report, 150 pages issued a couple of days ago, didn't single it out.
Right.
I think,
but they said we still don't know.
That's very true. And, I mean, remember, in any market event, especially in today's market, just like any other industry, technology plays such a huge role. It's hard to regress that out. But this is not a technology-driven event. A similar event happened in 1987 when human-based trading was a much bigger percentage of overall market volume. So it's about taking the technology we have and applying it to control over this kind of risk better than we did on May 6th.
So what about those erroneous trades, or so-called erroneous trades that happened? What kind of resolution would you like to see in terms of uniformity of how to unwind them should something like this happen again?
I think the first thing to do is to try as hard as possible to prevent those trades from going on the tape to begin with.
Sure, but saying that you can't prevent this from happening, what do you do to unwind it?
Well, I think it's all about making sure very clear ahead of time what the process is and what the standards are. So when an event like this happens, you can implement those standards very quickly and no one will be surprised about it.
All right. We do have to leave that there, but I want to quickly ask you as we head out why you think today is less serious than what we saw on May 6th in terms of concern levels in the market.
I don't know if it remains to be seen because we still have a lot of trading left in the day.
You're just saying it's too early in the day to make that call.
I think that's right.
All right. Thank you for joining us here on In Business.